Hi, Michael Glennon from Glennon Capital. And a bit of a mid-reporting season update. Reporting season's been good for us, but what I really want to talk about is what we look for when we're valuing a business. So a few weeks ago, we had some comments on the video that we did on One Page. People asked, why I thought that the business was worth 20 cents when it was currently trading at around $1. And the reason for that was when you look at that business, it had very limited cash flow. It had about $200,000 worth of revenue, had a very large market cap, and we didn't think that the revenue or the profit in that situation, the loss that it was making, justified the share price. So it's a very important concept. The market cap of the company and what people are paying for the shares is not what the business is worth. The business is actually worth the potential opportunity for that company to make cash and generate cash for its shareholders. So we struggle valuing, things like resource exploration companies, concepts, and business plans. We see many companies come in to present to us about investing with them, but we really can't see, either because they don't have any cash flow or we don't think that they will produce sufficient cash flows going forward, that there is any value in the shares. So for us, the key is where there's a company, it's trading at a value in the market, and we think that there's a different value for the cash flows that are going to be derived from that company going forward. So when there's a big difference between the two, that's what creates the opportunity. How we find that is we do analysis, we look into the balance sheet, and we look at the revenue of the business and the markets that it operates in, and then we model out that company and where we think that the cash flows can go. So that's where the opportunities come from. That's the things that we look for when we're valuing a business. And the more situations there are where people think that the value of a business is where the shares are currently trading, that's what creates opportunities, especially in the small cap market. Much harder to do in large caps, and that's why we're very favourably disposed to investing in small caps. In terms of current valuations for the market, there is talk that the market is getting expensive. Small caps have had a very good run, but we're still finding many small companies that have been passed over by investors where there's significant cash balances on the balance sheet and there's good cash flow coming. They might be in sectors such as mining services that are a little bit out of favour at the moment. So we're still finding many opportunities that where we can invest and the portfolio is still generating strong returns because we are sticking with our fundamentals and looking for businesses where we think that the value is a lot less than is a lot more than what the shares are currently trading for. So that's what we look for in companies. Hope you've enjoyed this video, and if you want to learn more, please look at our other videos on YouTube or go to our website and subscribe to our newsletter. Thank you.